Okay, welcome everyone. Thank you so much for coming. This panel, just a little tiny bit of background, was a big passion of mine because I saw all these dramas happening around the crypto exchanges, and I was concerned because this is my community, and I was wanting, the mainstream to have more trust restored. Unfortunately, I approached practically every exchange in the US and Canada, and just thanks to Clay, is the only representative from an exchange. But I can understand that they're all laying low, but it would be good to remove the fear and just come out and talk to people to help restore trust. But we're going to do our bit now tonight. We've got some great experts as well. As Clay, and I'm sure it's going to be a fabulous conversation. So I'm really grateful to you all for coming and for contributing. And also we've got this star old friend of mine, French journalist Phil, who's pretty spectacular as a moderator, I have to say. We always have a lot of fun. And also Bill Lambert is actually the host tonight. He's actually paid for the drinks, and I just want him just to have a few words.
Yeah, I just want to welcome you all here. I'm a patent attorney here at Shepherd Mullin. I do chemistry and material science, but I come to these talks because I'm actually just fascinated by what you guys are doing. Not that I pretend to understand it, but it's really sort of very, very educational. So thank you very much for coming here tonight and enjoying the presentations.
Thanks, Bill. I'm going to pass that over to Phil.
All right.
He's going to get the panelists to introduce.
I like to tease you, Pimo, to remind you I'm also now an American, so never forget that.
I'll stop calling him French, I'll call him American.
Yeah, that's very Frenchy side.
So you're still going to kiss both sides of the
Still
Okay.
have some problems to hurt, but it's okay. I just want to start to question the audience because it's always good to know who we have in the room. Just as an intro, I'm a real dummy, so I know nothing about crypto and stuff, but people like me to come because I'm not ashamed to ask a stupid question, which is very important to understand. I guess who knows nothing about crypto? Thank you. And who has bought any kind of bitcoins or whatever in the past? More people. And who has a startup? And who has invested in a startup in this domain? Oh, many hands. So good. So now time to come to know more about the panelists, and as a gentleman, I will give the mic to our first panelist. If you want to introduce yourself and what you have to do in this industry.
Yeah. Hi, my name is Lindsay Mall. I run a crypto hedge fund called Luna Capital. I spun Luna Capital out of Precursor Ventures about a year and a half ago, which is an early stage VC firm run by Charles Hudson. We focus on DAGs, direct to acyclic graphs, and scalability. We originally did a lot of trading, and now we're a little bit more passive. But I did a lot of my research at Precursor, which is why I decided to spin out Luna Capital, which they backed, and we have about 30 investors now. And I've been in this space since 2013, same for my two co-founders, one being Travis Goff, who co-founded CoinSource, which is the world's largest Bitcoin ATM. And then my other co-founder, Michael Mazzata, who's been a fund manager for 10 years.
Okay, Joe, you're the next.
Sure. Great. So my name is Joe DiPasquale. I run two things. One is a fund of funds, so looking at the different crypto funds that are out there and making investments in, let's say, 10 of them. And then the other is a direct fund as well. I heard you mention passive investing, so I think on our side we're very much proponents of active investing in crypto, which means the opposite of an index, right? So not buying and holding, but buying things that maybe aren't listed yet, or buying and selling repeatedly. So that's what I do: active management in crypto, fund of funds, and a direct fund.
Daniel? Yeah, it's not just.
My name is Daniel Edwards. I've been in the crypto space for a while. I come from Wall Street from an investment banking background. Then I was a group that started a crypto company, and we did a $38 million ICO. We were the first blockchain company in the world to partner with a major league sports team. That was Arsenal Football Club out of London. Built that company up, had an exit. I've switched to more of the investor side of the aisle in San Francisco. We're building healthcare companies, FinTech companies, and e-commerce companies, and been mining since 2011 in the blockchain space, so I'm enthusiastic and love to see it grow, but I'm kind of betting more on the fiat side of things for now. So kind of the other side of the panel here.
Clay?
Cool. Hey everyone, I'm Clay Robbins. I lead strategy and development at a company called 0x, which is a decentralized exchange protocol, not an exchange. We are the infrastructure layer that allows for exchanges to be built on top of the protocol and ultimately the Ethereum blockchain. And we are, as I mentioned, a decentralized exchange protocol, which means that we allow assets, not just ICO tokens, but things like video game assets, tokenized debt, prediction markets, what have you, to be exchanged in a peer-to-peer manner, meaning it's non-custodial. So we'll probably get into some of the bits of the difference between centralized and decentralized, but I think the core piece to understand there is that you actually don't have to custody your assets with a third party in order to exchange them, which I think is an important designation to make.
Great. So what I like to do usually it's just to gather the knowledge of this industry, which is very hard to follow. So I think it's always good to come back to the basic, and if someone can take the initiative to give us a little bit the landscape of, let's say, how many crypto funds so far, how many cryptocurrencies, because it's always moving. So what's the situation in terms of cryptocurrencies, for instance? How many cryptocurrencies are around?
I think I looked earlier and it was around 2,100 cryptocurrencies on CoinMarketCap. When I used to work at Precursor, we used to look at that website almost daily, and they're around 900 or below, and that was about a year and a half ago, or 2 years ago. And the space has grown exponentially. It's actually quite easy to build a cryptocurrency, so I don't know how much that says, but there are a ton of them around, active and inactive.
I also think it's important to highlight the difference between just cryptocurrencies and crypto assets, because I think there are multiple types of asset classes. So while there may be 2,000 or so ICO tokens that are associated with different projects, the number of assets that will ultimately exist and that are starting to exist today, like non-fungible tokens that represent video game assets. So now you can, as a video game player, actually own the assets that you earn while playing a video game and trade them on an open secondary marketplace. And so if you think about the number of those that can be created in association with a video game, that number is in the billions, possibly hundreds of billions. While there are not that many today, there's a growing number in sort of emerging asset classes as well.
Yeah, I would we did some work on, we do a lot of research as well, so we came up with 4 different categories of crypto assets. One is, yes, a currency, so you'll have Bitcoin, for example, as a currency. The other would be, there are tokens that represent equity, actually, so actually even some funds list their, or some other projects list their equity as a token. There's also non-equity securities, so people talk about real estate on the blockchain, for example, a lot. That'd be another category. And then there are those utility tokens, which a lot of the video games are arguing that they are, as opposed to the FCC, which is arguing that they are still a security, not a utility. But that's another category, those utility tokens as well.
Okay, so the topic of tonight is topic exchanges. So what I suggest is to go through the various steps. Who wants to say, because I guess, well, everyone has its own experience on that, and to see, okay, how does it work? Go from the basic and go from a step to another. So how do crypto exchanges work?
It's probably the best question.
Yeah.
Everyone can talk.
Yeah, so an exchange is, as everyone is familiar with, allows you to have different assets pooled in an interface that allows you to trade one asset for another. So say I have Bitcoin and Joe has Ethereum. We can find each other on an an exchange, whether it's centralized or decentralized, and find a fair market value based on supply and demand for those given assets and trade them back and forth. There are a variety of strategies that can be run. You have simple retail investors that are pretty price agnostic that come in and just buy assets on exchanges. You have institutions that are market making, so taking a spread of the difference between two asset prices in cryptocurrency. And then you also have arbitrageurs who are actually hopping between different exchanges, taking advantage of inefficiencies in the markets that exist on those different asset exchanges and pairs.
It's basically similar to the stock market or forex trading. It just simplified. There's not much of a difference except volatility, and it's quite unregulated. I think that will change in the next few years.
Yeah, and the other key difference there between stock markets and crypto exchanges is cryptos are a bearer instrument. So when you are trading on a centralized exchange, you have actually deposited those assets on that exchange. And so if someone finds a security loophole in the exchange's infrastructure, they can exploit that and actually steal your money. And so unlike something like a stock exchange, it's not a bearer instrument, and so there is no real risk to custodying those assets with a third party, but with cryptocurrency, there's very little recourse associated with that, and so you have to be very careful in that sense. And that's a key difference to have.
Yeah, so talking about security, that kind of brings up a point, is you can kind of tell how early something is in the life cycle of it. So there was a case study done with the top 130 crypto exchanges, and it basically said, let's look at them from a security vulnerability standpoint. And 1% of them were vulnerable to bot attacks, so sending off some kind of a bot attack against it, 1%. 60% of them were against things for basically doing, or I guess it was 40%, were it's called cardjacking. So it's basically where you put a layer in front of your login details, and it looks like you're logging into your crypto exchange, but you're actually logging into the hacker's network or into their database of supplying that information. And then I think it was 60% were vulnerable to denial of service attacks. And out of that whole 130, there were only 16% that were created a level A of security. So that kind of tells you where we're at in this landscape. And this study wasn't looking at just exchanges all over the board. It was looking at exchanges that had at least $100,000 in daily volume, were pretty big, and these are the top 130. And there's thousands of exchanges, and only 16% of that top 30 were in a good category. So if you're comparing crypto exchanges to something like the stock market, if only 16% of those had a good rating, I don't know if I would be playing around too much in the stock market, or I would only be playing with very selected players.
I think one of the things is that maybe we all realize, and perhaps everybody in this room realizes, that crypto exchanges in general are not a good place to keep your crypto. So, and it is, it does cause some hassle to take them from a secure wallet and trade them when you want to trade them. But in general, I think we would all agree not to keep any of your crypto on an exchange, which fully takes out this security concern that will be for the foreseeable future with exchanges.
I also think there's a huge lack of compliance with a lot of these exchanges. I would not be able to get responsive. I didn't know a lot of exchanges personally. Sometimes I need something fixed that day, and then I'll ping a friend that works there internally, and that helps a lot. But I remember back in the day, I needed help maybe changing my password or something, and it wasn't working. It would take maybe a month to get a response. And I think there needs to be a different type of regulation amongst security. It's going to look a lot different than the regular stock market.
Yeah, I think we will have a conversation about password later on. Another question I had is, what are cryptocurrency pairs? Can someone explain that?
I can explain a little bit. So I'll give you an example. So Coinbase, they have fiat pairs, which is fiat basically is a government-backed currency. You can use your fiat to buy Bitcoin. Whereas you have, let's say you have a Poloniex account where you can, or I guess now you can use fiat, but back in the day, you had to basically send Bitcoin or another currency to that exchange to buy another currency. So let's say you want to buy Litecoin. on a different exchange, say not on Coinbase, and you're using Bitcoin to buy it. So Bitcoin is basically your denominator currency. So if Bitcoin goes up 10%, and when you buy it, then that means you have more value in Litecoin. But let's say that Litecoin only moves 1% higher, and Bitcoin moves up like 5%, and you move into Litecoin, then you've kind of lost the opportunity cost. So I think the only way to really care about pairs is if you're doing arbitrage or HFT or day trader. It doesn't really matter to many people, but let's say you're trading more actively, you might want to consider that more. The things to consider with pairs are like volume, liquidity. You want to make sure that you can actually sell and buy, and then transaction fees. So every currency has a different transaction fee, and then the amount of time it takes to move into that currency. So if you're doing high frequency trading, you want the trade to execute as fast as possible before everyone else trades. So usually you want a higher transaction time.
How can you manage that on a daily basis? You really have to be like, searching for information all the time. It looks like it's a crazy word. I mean, it's like a...
Yeah, you would have to be a really, really good engineer / trader. I think it's really rare to find engineers that understand finance, but if you understand finance and code, you can build a pretty efficient bot, but that takes time. The people I know that are the best, like algo traders, are the ones that have been doing it for years. And it takes a lot of trial and error, especially in this space where things are quite unpredictable. A lot of people are trying machine learning algorithms through looking at Twitter and kind of looking at certain words that help maybe increase a currency or whatever, but that's also inefficient. You never know. I think that worked a lot better in 2017, but 2018 it wasn't that efficient. People could talk about one currency and nothing would happen. And because the markets are quite small, there's not as much volume as in the regular stock market, it is really easy for one fund or one exchange to manipulate the market overall.
And even if you're keeping on track with all those tethered pairs and everything else, there's companies like Tether in the industry that have been kind of called out at different points throughout last year and I think even the start of this year, where they have to hold in reserve the amount of currency tethered to the currency that they've tied it to, right? And so a lot of companies have been called out saying, do you actually have that reserve of currency, and where are you holding that currency? Because then it kind of comes into the digital or the fiat space, or at least like digital fiat, where you're saying, if you're storing that currency, where are you storing it? Because if I'm Dan's startup LLC and I'm in San Francisco, I probably don't have a vault with $100 million tethered to some kind of different cryptocurrency. And if I do, I mean, you guys can all probably come rob me pretty easily. And so, that kind of like points up, a thing of security in the physical world, right? You could have everything down amazingly in the digital realm with your blockchain and your pairing and your exchange. But then it comes down to like a physical security. And there's a reason that banks have big, huge cement vaults and security guards with weapons. And so it's very complicated.
I don't know the algo trading, I don't know if that's interesting to people, but I know we haven't found a lot of funds that are fully algo yet, because even with this machine learning, there's a lot of unexpected things that come up. So some news in the hedge fund world last year is when Pantera had launched a fund that was intended to be fully algorithmic. Then they actually said that it was not going to be fully algorithmic. They were going to actually kind of manually look over it. And so we've seen funds like that, or other systematic funds that even go long and short on, let's say, just Bitcoin futures and try to be market neutral, right? So not to make a profit off of inefficiencies. Things that are typically, I would say, fully algorithmic in the equities, let's say, long short world are not fully algorithmic yet in crypto, because so many unexpected things are still happening.
Everything you say is interesting too.
Okay.
Honestly, take the mic,
right,
please. So moving forward, why do crypto exchanges have different prices?
Well, every crypto exchange is quite different. It's all about supply and demand. And there's different volumes on exchanges. So I remember last year, this also has a lot to do with arbitrage. So 2017, there was, I think, an exchange in Zimbabwe. Do you remember when the price was quite different?
Yeah.
It was like 10,000 for one Bitcoin on Zimbabwe exchange, and then maybe 6,000 in US exchanges. So that's a huge opportunity. But the risk there is that you probably won't be able to get out your money in a Zimbabwe exchange. So there's that. Every exchange is just different. You can't, it's all about how many users, how many traders on the platform, and how many market makers, what they're doing on there as well. And just simply supply and demand.
A quick addition to that, I would say, arbitrages are really, it's a quicksand of an opportunity, I would say, because there's been recent reports, even in the last week, that most exchanges are inflating their volume of trading. So even if you see a price that's higher, like a Bitcoin price that's higher, it may be actually fake, or it might just be that there's literally nothing trading and hasn't been trading for minutes or hours. And so there's an old price there, and what you'll find is what we call slippage, where you think the price is something, and either because of, for various reasons, you actually get a worse price. So arbitrage is definitely a complicated strategy, but one that many funds use successfully. You just have to know that you're getting into something where you're competing against professional traders.
And then from the retail side of it, I know our customer service queue always went crazy when people would look on this tiny little exchange, I won't say the name, and it would be 5x what the price of our currency was. And everyone would be like, hey, why is that not reflected on Binance or any of these other exchanges? It's like, you don't understand, the volume on this exchange is pretty much nothing. And if you wanted to buy one share on that, who knows if it would go through, you have no idea. And people just didn't understand that from like a retail concept. They think just like the securities market or just like the central bank, it's all one big organization run by one central body that kind of dictates all this, right? And when you start talking the decentralized world and different companies are making different decisions, market dynamics and everything, it's really complicated, and a lot of retail people don't understand that. And I think actually that's kind of slowed a lot of adoption, because when you look at different crypto exchanges and the prices are all different, you get really weirded out, right? I mean, if you went to a Target or even a McDonald's and a Big Mac was different for the most case in price by dollars, you would kind of start to say, like, what's going on here? Is the quality different? Why is the price so different?
Clay?
Yeah, I think the only thing I'd point out in addition to that is that in a perfect world, as this market matures, there shouldn't be a lot of variance in price, right? There's a long tail of exchanges that in the Bitwise report were shown to be spoofing volume, and I think that as more regulators begin looking at the space and understanding what market manipulation looks like in the space, you'll start to see more consolidation of exchanges, and with that, the number of arbitrage opportunities that exist will continue to decrease as liquidity concentrates, and hopefully markets become more efficient. And that's sort of the telltale sign of a healthy market is one where prices don't vary that much across exchanges. If you look at stock markets, it's on the order of bps or even smaller. And so, at scale, we hope to see a world where price variance across exchanges is pretty small.
So if I understand well, and who's not the next question, I can profit from price differences at various exchanges.
Yep.
Wonderful.
It's difficult because you can basically sell, you could say like, I'm going to sell or buy Bitcoin at whatever price you want, but it's going to be very hard to find a buyer/seller. You want to have a price that's competitive but also reasonable. It also depends on who you're selling or buying with and how much they really want it at that price. At the end of the day, it is about supply and demand, and every exchange, it's all dependent on if people are willing to buy it at that price. And so you need a person on the bid and ask end of each price.
Okay, so if I want to try it, where do I start? I want to try.
Well, I'll talk about decentralized exchange, we haven't touched on that much, but I think one of the things that's great about the way that we operate is we have a number of what we call a PRC20 exchanges built on top of us. So there's several dozen that have been built where you can go and if you don't have crypto assets, you can purchase them and then begin trading on any number of the exchanges that are built with 0x, something like Radar Relay. You can go look them up on Google, and they have a nice onboarding flow where you can begin to trade and speculate and hopefully profit.
Mm-hmm.
But I think what I wanted to highlight is that exchange is actually this function that sort of underpins a whole different set of use cases. And so you could actually begin by buying a CryptoKitty. That's a unique digital asset that's available on a host of marketplaces that allow for the exchange of these assets to go back and forth. So you can pay a price for one of these cute little non-fungible tokens, and that can begin your exchange experience. And so I think that the entry points are pretty much endless, and so where you want to access it probably depends on your interests and where you want to start trading. You can also start on Coinbase too. It's probably the easiest way.
I think if you're beginning, you should definitely start on Coinbase or Gemini or Ponyx, where the UI UX is quite more simple. I remember in the early days, my friends and I would just set up Coinbase accounts and refer each other, and it was just so easy. I don't think I would have ever started if everything were DEXs. Decentralized exchanges is what a DEX means. Because the UI UX is still kind of growing and forming itself, and it's a little bit more for a sophisticated person in the space, I would say. But I think DEXs will be really huge as the market grows. I think Coinbase and a lot of these early exchanges are the reason why crypto has become so huge, because they really made it simple to buy something, and it was super easy to tell all your friends to buy Bitcoin back in college, and people just did it.
And Phil's question, about where can you start with this arbitrage strategy, to me just requires a little bit of a zooming out. So, of these 600 about crypto funds, right? First, you have about half of them that do equity investments in blockchain projects, crypto or blockchain funds. So that's we're not even talking about tokens that are listed. It's not any of the 2,000 tokens. It's actually an equity investment. And then you have the other half, the other 300, that do invest either in tokens or in pre-launch tokens, like initial coin offerings. And then let's say you're zooming down into those, the half that invest in tokens. There will be a multitude of strategies, right? So arbitrage is one non-directional strategy. If you want to look for other non-directional strategies, you can do other things, what we've talked about, quantitative trading. We talk about volatility-weighted positions. You can either do other random things like staking, or you're just trying to profit off of interest in holding crypto in some way. But what most token funds do is they actually try to get in early on projects that they believe in, like 0x, for example, or there's many things that I've appreciated this year already, about 200% in value. Binance Coin, and coin of an exchange, Litecoin, Loom, and many others are many of the funds that you see today that invest publicly in tokens took the opportunity of prices hitting their low on December 15th of last year, where Bitcoin was around 3,200, now it's around 4,000, to kind of think that maybe it was a low that they should, a price point where they should buy into crypto exchanges. So yes, there's an arbitrage strategy that you can do, and if you're a quantitative person, and if you don't mind kind of being very much on during the time when you're doing that, you can do that. Most people like to try to pick whatever winners they like, pick the Apple or Amazon of the crypto world.
So there's a general rule that I think is pretty simple to follow, is just figure out how hard KYC is. If you go through a KYC process and they pretty much just ask for your email address and you can get in and start trading, that's probably not a good sign. It means they're probably not going to take care of your money very, very well. But there's also another correlation to that. Usually the amount of tokens they have listed is a general indicator of how difficult the KYC is. So I'll give you an example. Binance has a huge plethora, giant list of tokens that they have. But the KYC is among the lowest in the industry. And then you go something like a Coinbase, it's pretty much the upper echelons of KYC. That's kind of what everybody aspires to be in the industry. And they have a very small, it's growing, but started out very small top list of coins. And so figuring it out, from your, appetite of risk is, would you, if you were signing up for a bank account, just want to give someone very, very basic information and then hand your money over to them? Same with an exchange. Do you want to go through a KYC process where you feel like they're checking out who you are, but they're doing it because they're going to take care of you and protect your money? And if they're not doing that KYC process, then there's probably something going on there that you need to check into further.
Yeah, if an exchange is not careful about asking who you are, KYC stands for Know Your Customer, then you should definitely be careful. It is really important to consider what custodianship means, and you should probably not hold your capital on exchange for too long if you want to take that risk. I don't think it's terrible to put your money on a foreign exchange, but definitely being more careful because regulation isn't super strong right now. And the best way to arbitrage is to arbitrage with foreign exchanges, but also that KYC might be difficult because a lot of them don't want US investors on their exchange. So a lot of people just run VPNs or whatever, or a lot of funds, they'll have an international partner, which allows them to get access to those exchanges as well.
Another question? You want to ask a question now?
Should we hold off?
If you want.
Oh, which ones?
No, no.
Where do you guys see the
If it's related, because I have a logic with the panel, so are we on this topic?
regulation?
You take it from my mouth, please.
Where do you guys see the regulation of the exchanges going? Is it sort of a people are divided between good and bad? Is there a balance, or if there are regulations happening in the US, is it going to be you see in the near future, or it's not going to happen anytime soon?
I'll just quickly say that the SEC is actively looking into exchanges, and we've even seen, I mentioned Binance's coin, the Binance coin is what it's called. Bittrex also was going to do a coin for non-US investors and just pulled it last week. And we know that the SEC is very actively looking into all exchanges, especially the exchanges which listed securities tokens that are deemed as securities. So the SEC has deemed that Bitcoin and Ethereum are not securities, but that other coins that have been recently through an ICO are almost definitely securities. So they're very much getting information from all the exchanges to make sure that they're compliant with all the things that an exchange would need to do to actually list securities, such as limit up and down rules, like so if a coin spikes, shutting off trading, knowing who their clients are, for example, and making sure they're accredited investors and other things. So I think it's just, there's been, even like funnily enough or not, the government shutdown actually really impacted crypto, and I know that the SEC was shut down for a couple months due to that as well. So there's been a little bit of a lag for clear guidance coming out, but we all expect much clearer guidance this year.
Yeah, so I kind of have a different view standing on the fiat fintech side. So I'm the chairman of a company in London that's a fiat fintech company, and we're extremely regulated by the UK, by London, by America. So I already sit a lot in the banking space of very regulated entities, and I see crypto and blockchain kind of going that way, to where you're filing regulatory reports all the time. There's an watch body, kind of like the SEC, or whether it's like FIS or other entities that are kind of looking at you, and if you do something wrong, you will be punished in some kind of way. And I know Bittrex and Coinbase and other exchanges, even Binance announced today, they're doubling down on their KYC efforts. They're trying to make sure that they're more compliant, or heading towards, I guess there's no body to be compliant with, but more of a compliant, focused mindset. And actually, I have a horror story from just being an investor in a crypto company where an exchange, HitBTC, decided to go from one level of KYC to a next level overnight. And all the companies that were on that list basically said, if you don't submit these documents to the owners of those companies, those individual token companies, asset companies, everybody, then you won't be trading the next day. And some of them were given 15 days, some of them, were really sluggish on it. And I happened to wake up and nothing to do with me, but me and all my fellow investors had no liquidity in that token that we were in on that exchange. There were other exchanges that we could go to, but if we were holding any currency in that HitBTC account for that token, there was no liquidity. There was no way to get it out. And then you message things like HitBTC and say, hey, how do I get my coin out of this? And they go, just be patient with us. And let's say that was a stock, on the New York Stock Exchange, you would be able to go to the Securities and Exchange Commission and say, hey, help me out here. And obviously the SEC would give you warning, they would hold your hand through it all, and that's just something you don't see in this space because there isn't a body like that helping out with the regulatory perspective. So if you're a retail investor and you don't know what's going on, it can be really scary.
Yeah, I think the only thing I'd add there is it's encouraging to see that regulators are taking a nuanced approach to the entire market, not just exchange regulation, but regulation more broadly. We have engaged and written pieces for folks like the CFTC to educate them on what this emerging trend of open finance is and what it means for financial markets more broadly and across the world. And for those that don't know, open finance is basically the ability to take different underlying financial primitives and bundle them together to create unique markets that couldn't have existed otherwise because of the legal barrier to entry or the operational overhead or the demand may not be there. Anyone that is a skilled enough coder can actually compose a financial market in a matter of minutes with a smart contract, and that is a really powerful tool. And I think that what's great is that the regulators like the SEC and the CFTC are taking this approach of educate us first so that we can make an informed decision, because the macro risk that they run here, right, is stifling innovation. Because of the permissionless nature of a lot of these different underlying financial primitives, it allows for anyone anywhere in the world to do this sort of stuff. And so if you as the regulator for the US take a strong approach to regulation, that can lead to innovation migrating elsewhere, which net hurts the US. The US's benefit from this technology. So I think that's an encouraging thing to see.
Still in the same topic?
I can make a comment to what's happening in Europe with the exchanges, if that's here. So what's happening right now is that the traditional exchanges are really looking into it. For instance, the Stuttgart Stock Exchange has opened up an anonymous crypto exchange. They are for payment tokens in the beginning, but now they're looking very strongly into the security tokens. Gibraltar has opened up a utility exchange. Malta is doing that. Other exchanges are looking into it. So what's happening now is that the traditional exchanges understanding that it's a big market and they can't stay away. And the big question obviously is all those criteria in KYC, AML, and all the problems of front running that's coming in that are a little bit different that we're looking here. So what we see is a lot of professionalism going into that kind of exchange. And what is totally unknown up to now for all of those are the decentralized exchanges. That's something they don't really deal with up to now, and I think that's fascinating what's happening and what you're doing. I think that aspect is not reflected at all as of now, neither by the regulators nor by the traditional exchanges, because that's not their business.
Yeah, there's sort of like two parallel universes that are existing right now. There's sort of the traditional finance side of the house or universe that is focused on how do we fit centralized exchanges and these different asset types into the existing frameworks. And then there's this other side that started as sort of a pro-libertarian type approach of permissionless innovation, but actually there's a lot of there just because of the composability of these different markets. And a lot of the existing infrastructure that exists in a really inefficient way in traditional markets can be created in a much more efficient and cost-effective way in the open finance context. And so I think these two worlds are going to exist in parallel for a while, but eventually there will be a specific market that someone on a trading desk at some large firm can't access, and it'll only exist in the context of like an Ethereum-based contract. And that's when there will be an inflection point where the two worlds are actually married together. But for now, we're doing our best to educate the folks that are interested in understanding the space, but it's still tiny. I mean, the number of people that actually care about this stuff is probably like on the order of 10,000 people, right? And so I think there's a lot of self-regulation that needs to occur, especially in the open finance context, and also be looking to the traditional finance world to see, okay, what are those pieces that we need to build into the infrastructure that we're building in our world, like KYC. There's a couple of solutions that allow for that, and ultimately that'll lead to broader adoption. So, yeah.
It's a well-known fact that Europe is always a bit late and they're quite busy those days.
In this case, it's the other way around. For once, Europe is fast.
I just wanted to, well, speaking about regulation,
Yeah.
of course, monsieur, of course. We know that. Thank you for your questions. You said 10,000, know your customer. How many people actually, I don't know, in the population in the US, people buying crypto? How many people does it concern? Do we have some numbers on that?
Yeah, so not in terms of number of people, but on CoinMarketCap, you can see the actual, like, how many hundreds of millions of dollars are traded in Bitcoin per day. So it's about on the order for Bitcoin hundreds of millions of dollars per day, and that's actually per this study that came out last week that said that many exchanges are inflating their volume because on sites like CoinMarketCap, it actually shows billions of dollars a day. So I think it was like $300 million a day of Bitcoin. And Bitcoin represents, the beginning of 2017 when the market cap of crypto was maybe something like $50 billion or between $30 to $50 billion. Bitcoin represented 70% of the total market, but now it represents about 50% of the total market. So there's under $1 billion trading per day. And in terms of the 10,000 people comment, I think that's right in terms of decentralized exchanges. I think was your. But what's funny to me is and I think probably maybe those of us who are in investment companies is I just heard so many people when Bitcoin was at 19,000 wish they were in at a $3,000 pricing, and that's what we're seeing these days. So it's always counterintuitive. In investing, right, you have to be both contrarian and right. So we're at this point where the room's not full right now, right? So, and we're at this contrarian point. You have to then decide if you believe in the concept of decentralized exchanges or the concept of decentralized currency or decentralized securities. And I think to be truly win in investing, you'll need to be contrarian in some way. We're certainly at a contrarian point right now.
Okay, you make me.
Yeah, I was just going to add to Joe's point. It's what I always like to do is kind of see how world leaders are thinking about this, right? Because we can all have opinions on this, but at the end of the day, it kind of goes down to what are regulators or people of power thinking about this. And heads of the central bank have come out. There's been a lot of talk about a digital currency. So if we look at where's an exchange going, well, you have to back up a couple steps and say, tokens or assets are the things that will go through a digital exchange. And so, we need to start where the root of the problem is. And a lot of those leaders of central banks and central banking organizations around the world have said they don't like the thought of creating a central digital currency. Because if you think about it, right now how the banking system works is there's a central bank and then there's retail banks and consumer banks. And if you were to flip that on its head and a central bank were to create a digital currency, all of a sudden it becomes a retail bank. So you're taking away that layer of the JP Morgans, the Wells Fargos, even now Goldman Sachs is getting into banking with their issuing of the Apple credit card and other products like Marcus. So you start to say the central banks do not want to get into the business of being a retail bank. And so if they don't want to do it, then that means that the ecosystem will probably be the way it is, at least right now, for the foreseeable future, which is that this middle layer of Wells Fargo type banks, but in this case, it's going to be everybody creating digital assets or token assets or tokens, will be that kind of layer of value. And the central bank won't step in that capacity. It'd be really interesting to see a central bank digital token, but I don't think it's going to happen based on that. So then you can say, regulatory stuff for exchanges will probably stay closer to the way it is instead of trying to move towards like an SEC type regulated thing, because then you would think that they would also have their own digital currency in some sense.
The one caveat or issue I take with that is it depends on which nation's central bank is associated with that point of view, right? Because if it's one that has a government in place that's more of a dictatorship, blockchain actually represents one of the greatest ways to surveil the flow of funds amongst the population as possible. So as a central bank, you probably want to issue a currency and track it that way. But yeah, generally I agree with your point of view in healthy democracies like the US, that's probably the right approach.
Okay, not last question, but technical one at least. So IPO, ICO, IEO. Joe, you mentioned that the initial exchange offerings would be a nice thing to talk about. So can you?
Yeah, just really quickly, there's a little bit of a trend, I guess, with exchanges launching a coin. And so if we mentioned Binance would be just, I think, the best example of that. So there's a coin called Binance Coin. If you want to be, and Dan mentioned that Binance is a place where many new coins are being listed. So many coins will do an ICO on Binance. And Binance is now doing a thing where to actually buy into the ICO, you first buy Binance Coin, and then you buy the ICO in coin itself. So it's just another pairing, to use your term, right? So you can buy something on Binance now with, a tethered coin like Tether, or a stable coin like Tether, or Bitcoin, or Ethereum, or Binance Coin itself. So it's on the same coin, and they do a number of different things to actually appreciate the value of the coin itself. I mentioned it's gone up about 200% this year, and so it's just it's a coin for an exchange itself that is a pair often on that exchange. Please.
Or you go.
Go for it.
I was just going to say that the whole point of IEOs and having native coins specific to a type of exchange is, from a business perspective, is lock-in, because crypto exchanges generally are pretty commoditized, and so in order to drive habitual behavior where people only come back to your exchange, having new issuances where you can only get access through some proprietary asset, and having a wallet that is only available to trade on a specific exchange is just a way to drive lock-in. I mean, you see this with traditional social networks and things like that, is how can you create a closed ecosystem where folks have every reason to continue coming back and adding different products and services and features that create those habitual or virtuous cycles is the point of all of this, right? And the multiple exchanges, or exchanges actually doing offerings solely on their exchange is a way to drive trading fee revenue, because they ultimately just take a small percentage of each transaction. The more assets that exist, the more opportunities there are for those assets to be traded, and so and especially novel ones drive a great deal of volume, and so that's sort of the why behind some of these things that you see happening.
I would also just add it's more promising for tokens to launch on an exchange. Typically, token is raised privately, and they do their public raise, and it takes them a while or lots of negotiating to get on an exchange, and it costs a lot of money. But now what they're doing is they're partnering with exchanges, and they're saying, hey, we'll raise $5 million, give you a percentage of how much we raise, and then we automatically get on the exchange. So a lot of projects are looking into that now, especially since it's really hard to find capital. And more people are seeing a little bit of light and promise in these IEOs, because some of the first initial ones were pretty successful. So we'll see how long that lasts.
Just a funny little comment on that about like exchanges and getting on exchanges. I think when we were looking at Binance, it was like $200,000 and a Lambo, and they sent that over with a term sheet, and it's. That's kind of the ridiculousness it used to be. And so we're getting to more of a serious kind of playing field.
Speaking about getting more serious, the eyes in the eyes to each of you. So Quadrigo 6, the password forgotten. What else? 95% of reported Bitcoin trading volume is fake. Cryptopia exchange in New Zealand was hacked. Do you still believe in this industry, in this still?
Yeah, so I mean, I guess I would say I'm probably the most pessimistic person up here, but I still believe in it. And I mean, I was in it pretty early and fell in love with it, and I saw the promise of it, but what happened is a lot of people came to the party who shouldn't be there. And obviously, I came in at a great time, did what I wanted to do. It didn't go as far as I wanted because we ended up having an exit, but then making my decision for my next venture, I decided to focus more on the fiat side of FinTech than the blockchain side. And the reason for that is, this isn't financial advice, but I know my peer group in the blockchain space for other digital tokens, a lot of them were fraudulent. And I know that a lot of them, their user numbers, their revenue numbers, everything that they did were very subpar. if you graded them against anything outside of crypto. You know, I mean, a good look is like CryptoKitties. Like, you know, they had at one point 14,000 daily active users. If you compare that to anything else in the gaming space that's not blockchain, that's horrible. You know, they wouldn't be able to raise funding with those kind of numbers. I know we had a competitor to us that was using a gaming software platform, and they had 4 daily active users. 4. And this is a company, I won't say who they are, but they raised $26+ million in ICO. And this was a year plus after the ICO. So, and I mean, I doubt that their number is above 6 daily active users now. So, I mean, this is the kind of environment we're playing in. And so, personally, I've chosen to take kind of a backseat on it and watch. I still have crypto investments, but the thing that I saw is the digital revolution is here, whether it's in blockchain or digital assets or even digital fiat. And so I'm deciding to spend my time more on the digital fiat side, and I think it's really exciting. And I think that Bitcoin and, you know, crypto and blockchain will catch up and get there, but we're going to have this nuclear bombshell of all these ICO companies that raised $20+ million that will run out of funding, and then everyone will realize, what have we done? Because they swapped Bitcoin and Ethereum for these tokens, and everyone's still running around acting like these tokens have values, and they don't. So once that happens, it's a huge buying opportunity, and I'm excited for it. I'll be throwing tons of stuff in because, you know, I wish I could short all these companies and make double the money. I'd short them on the way down, I'd buy when everything's low, and I'd ride it back up.
I think something that is so loud that the government can't ignore is something to definitely consider thinking about. I think we're still extremely early. If you just simply look at how, like in economics, how the world is really behaving right now, and, you know, maybe a lot of people see a recession coming up. You've looked at the last 10 years and what the government has been doing with quantitative easing by putting more money into the market, more liquidity, and how unnatural that was, and how last year they actually had to backtrack and do this thing called quantitative tightening, which is basically pushing back. And the government is going to take on huge debt because of that. I think that was something, a test that the government has been doing the past 10 years to kind of stabilize interest rates, to get more money into the market, to get more people spending, but it was quite inorganic. So you can see kind of the holes that the government has and how cryptocurrency, this underlying technology, can really, really impact the way that governments see money, the way that we move money across the world. And banks are even considering it. I'm really close to a lot of the banks in New York, and a lot of them are building their own stablecoins because it's really hard for them to do AML KYC, so they have their own internal way of doing it. And instead of tracking every transaction, they're basically just doing AML KYC on the person, and they don't really track transactions anymore. And I think they're going to probably try to figure that out even more in depth in the next few years, but as of right now, that's kind of their go-to.
Okay.
Just to double down on her point, if you want to see something really scary, go Google the monetary supply of the United States, and it's quadrupled since what has happened, what she's talking about. You'll see a graph go like this, and it's all of that just came out of thin air. So I mean, we're still due for something, and that's in the fiat world.
Two quick examples of what you guys are talking about. Lindsay, you mentioned banks, you know, issuing their own stable coins. So you see JP Morgan launch JPM coin, or say that they will be launching JPM coin, which is a product for their clients who are KYC to buy digital assets with. And then, you know, I think we've seen also kind of the opposite trend happening with these ICOs, where a lot of funds now are able to actually get equity if they buy into an ICO, or board seats, or things that they were not able to get when there was a line out the door for any ICO. Now it's quite the opposite. So we see even platforms like BitTorrent, which has hundreds of millions of users, do an ICO and raise, you know, single-digit millions. So pricing is really, it's a different world, and I think in crypto pricing and even in negotiating today, where you get the whole kit and caboodle if you're willing to put money in. It's fine.
For the last minutes, please give your answer, and if you could, after, just give us some news about your company or yourself. Please tell us what you think, and then also what's the news, and we'll go and we will finish on that. And the question can be organized after with some time possible. Thank you.
Yeah, so I think the original question was how we feel about the long-term viability
Yes.
of all this stuff. And so, like, with the example of exchange tax and all of that, I don't think that's terribly interesting. It's going to continue to happen as the underlying value of these assets appreciate. There's a massive honeypot, so people are going to try to hack it. Now, the difference is the adults have kind of showed up with things like custody solutions like BitGo and Fidelity and a couple of others that have launched that are going to bring a much higher grade of security for folks that do want to custody their assets with a third party. So I think that risk will continue to be mitigated, though we'll still see those types of newsworthy clickbait news stories coming out. But my point of view on the long-term viability of all this is I try to look at history to determine sort of how things are going to play out. And I think if you use the advent of the internet as sort of the analog, you had this massive speculative hype in the early 2000s and subsequent valley of despair. But in that valley of despair, that's where people that actually cared about the industry and were interested in actually making it work started to build. So that's when you had the Facebooks and the like that launched, and ultimately come 2005, 2006, and post 2008, you see the appreciation, the realization of the value that these different types of technologies can provide to the world, and also the double-edged sword of what they can do on the other end with things like elections. So I think that right now, if you are in this industry, you care about the long-term viability of it, and some of the smartest people in the world, I think, are working on different aspects of financial markets and a lot of other stuff that we've mentioned today. And ultimately, in the next 5 years or so, you will start to see those really killer use cases start to emerge. But it's going to take time, and so it's very easy to point and laugh at daily active users and things like that. But ultimately, I think there's a lot of there. So that's something I'm excited about. In terms of news to announce, I don't have like a big announcement. I think the biggest thing for us is we're continuing to focus on liquidity and use case expansion. As I mentioned, exchange is sort of this layer or this function that underpins a bunch of different use cases. So we've been focusing a lot on gaming, new types of financial markets, and actually we have an ecosystem fund that provides grant funding, so non-equity based funding to projects in the space that are building with our technology. And the idea there is help folks get to an MVP and ultimately allow them to go on and raise proper equity rounds, which many of them have done. And so we're going to continue focusing on that, finding the builders that want to continue building in the space, and hopefully find the next big thing that will unlock something that we all will use on a daily basis in the future.
Short announcement to finish.
Short announcement.
Because people is looking at me and
all right, I'll just say for us, Bitbull Capital, we do a lot of research. So if you get on our email list, we send things like we did a crypto hedge fund index for last year, what we saw crypto hedge funds returning. We send out numbers, pricing numbers, things, deals we like. So bitbullcapital.com, join that list if you want that sort of stuff.
Yeah, no big news for Luna Capital. I am an advisor to Republic Crypto, which is a platform that allows unaccredited investors to invest in the space as well, which I think is a really big part of the space and why a lot of people got into it. That's a big reason why I joined Precursor. There is a new funding mechanism where more people could be involved and not just the wealthy.
Yep, so I'm a partner at Angel Rush Ventures, and we're building mostly e-commerce businesses, a little bit e-com healthcare and FinTech companies. So if you're interested in getting connected into that space, either investing, we kind of also build in-house companies, and we built a lot of companies that have gone on to have multiple $1 million run rate revenues and $1 billion valuations. So if you're looking to partner on that, we're not raising capital, but we're always looking to add to my capital and my other partners' capital as we build companies.
Thank you for answering all the questions. Now the mic goes to
Thanks so much, everyone. Could everyone give a round of applause?